Good morning, Paul Georgie from Allendale. It's May 9th, 2011. Looks like we're going to have an up day here today. The markets are stronger in overnight trade in the grain markets. Crude oil right now is up $2.50, gold up $12, and stock indexes are higher pretty much across the board, with the dollar being lower, down about 25 points. So all of that looks like investors willing to short cover some, take on a little bit of risk here this morning after last week's sell-off and sharp sell-off late in the day on Friday in the grain markets. Some of the news that we got to talk about here this morning is the weather, of course. We had some dry areas over the weekend. The planters were running here in northern Illinois, and the big question is going to be, what does the USDA put out this afternoon on the planting progress report? Many are suspecting somewhere between 33 and 35%. There's even talk that we could have 40% planted here by the end of yesterday, which I don't think we'll probably be seeing numbers that high. That would be a little more aggressive than we think is likely anyway, but in that 33 to 35 range certainly sounds reasonable. The weather forecast for this week looks like we'll start out dry in some areas, but then chances of rain, the forecast here for the next 7 to 10 days, 80% coverage of some type of moisture in the throughout the Midwest and Delta corn growing region. The other news is this week is the supply demand report that the USDA will release on Wednesday morning at 7:30. The numbers there, because of reduced export business, reduced demand, and the trade is expecting that we could see some larger numbers coming out of the ending stocks for old crop corn, with the anticipation of new crop corn ending stocks tightening, as the thought is that the USDA will need to lower the yield number that they use in the balance sheet, so it could tighten up those ending stocks in the old crop corn. So those are numbers that we're going to be watching for here on Wednesday morning. We did see a tremendous amount of fund liquidation last week. The CFTC Commitment of Traders report that was out on Friday afternoon that showed as of Tuesday, they had already liquidated 36,000 contracts from their long side of the equation. So certainly a reason for the pressure, and we would expect that we should see a lot more liquidation on this next report because it appears like the funds were selling all the way through the balance of the week as well. Over in the soybeans, we had stronger markets there across the globe. The Dalian exchange was higher overnight to sharply higher, basically on short covering. The market had been under a lot of pressure last week, and same in China. Traders there decided to buy and short cover their positions. The pressure still remains in the beans because of the poor crush margins in the U.S. and in China, so it's reducing the demand for soybeans. The supply-demand report coming out on Wednesday is going to be monitored very closely. The feeling is there that we could see some increase in ending stocks because of lack of consumption, the lack of that crush here in both China and in the U.S. In the wheat markets, where the excitement was overnight, we've seen very strong markets there. It came out of Europe as well. The EU markets were a lot stronger overnight because of the dry conditions they have there. Now, the weather forecast is for a little bit more moisture this week, but very concerned about the new crop wheat in Europe. The wheat production here in the U.S. is still a big concern. We had Kansas Tour give us their numbers on Friday, and that suggests that we've got the worst crop of Kansas wheat since 1996. So expect to see some support, some short covering here today, maybe into tomorrow ahead of the Wednesday USDA report. In the livestock trade, cattle markets and cutout values were sharply lower on Friday. Choice down 219, select down 375. So we broke this the product market sharply. Would expect that that's going to translate to some lower cash cattle prices early this week, and could very well keep a lid on the futures markets on any kind of a short covering rally there. We wouldn't be surprised to see some more selling come into that market. The target of 106 for the June contract is still intact. Many traders are looking for that number, as well as our own Rich Nelson has projected that to be a target in the June contract, so something to monitor very closely. The hog trade cutout values there were quiet. We did have a reversal day on Thursday of last week, or an outside day, you might say, and a quiet day on Friday. So today's action is going to depend on fund activity again. We think that if we took out Friday or Thursday's highs, you could see some more stops being hit and take the market up a few dollars in some type of a recovery here. Funds have been huge sellers, and the CFTC report on Friday showed that they liquidated over 11,000 contracts in the hog complex as of Tuesday of last week, and certainly would expect to see more larger numbers there as we go into the next week, this coming week's report. So the cash markets, however, are a little stronger. Field work is underway in hog producing areas, so that is supporting this cash market a bit, but there is rain in the forecast, so we would expect to see some two-sided trade there, but a firmer, steady to firm trade in the cash here today. So if you got any questions, don't hesitate to give us a call. We'd be happy to answer those questions for you. You can reach us at 800-262-7538. We wish you a very successful trading day. We'll talk to you tomorrow morning. Thank you.